Hi everyone, this is Michael Kramer of Ma Capital. Today is Tuesday, April 22nd, and it's around 4:10 New York time. So this week has been a really slow week in terms of news flow, economic data. Tomorrow things will start picking up a little bit, but really it's not till next week that we're gonna start seeing some more important stuff. Tomorrow we will be getting S&P Global PMI, manufacturing services, and composite. These are just flash numbers, so these are preliminary looks at the month of April, give us a good sense of how things are going. We'll also be getting new home sales, and then at 1 o'clock Eastern, we'll be getting a 5-year auction, something worth paying attention to. On Thursday, we'll be getting durable goods and initial jobless claims and continuing claims, existing home sales, and we'll be getting a 7-year auction at 1 o'clock in the afternoon that day Eastern. And then on Friday, we'll be getting the final readings of University of Michigan consumer sentiment numbers. So again, this week isn't really going to be a market-moving week from economic data, although there can certainly be hiccups throughout the week. Any sort of really major movements probably going to come on the trade war front. With that said, we've seen the euro really try to break out here and get above this 114.70 area. It was able to do so a little bit yesterday, and today we came back in. Again, momentum in the euro has been really strong, especially when you look at it from an RSI standpoint. I mean, right now you can say we're a little bit overbought, but really, I mean, the momentum in the euro is so strong that you can make a case for it to continue to go even higher. I think the next major level of resistance probably comes somewhere around this 117 region. It's not unusual, though, to see, after a breakout, you come back and retest that breakout, and you can certainly make a case that maybe we come back and retest this 114 area. It looks like we've already pretty much done that, but again, I would still be favoring further upside in the euro. It looks like there's a good solid momentum there, and with everything going on here in the US, that trend seems to still be intact. When we look at the pound, also been moving higher, although we did hit resistance at 134.20. So right now it looks like the next major level of resistance probably comes around 136. Also, like the euro, we're seeing very good positive momentum, and we can certainly make a case also that maybe getting a little bit overbought here. If we do see a pullback, I think it would probably be pretty light, maybe moves back to 132.7 or so. But again, momentum in these currencies really favor dollar weakness, and so it's hard to be too bearish on the pound or the euro or the yen for that matter, although the yen has really also fallen to a pretty important point here. I mean, you can really see it when you just look at the chart, how important this 141 region is. Again, it looks like, the yen has really seen that momentum really favor further strengthening. Again, the problem here, the tricky thing with the yen is that really this has been a level that's now held multiple times, and so we tried to break below it today, and we came back above, reaching actually a low of about 139.88. So it's being probed and it's being tested, but as of right now, we're not seeing that move through. So we're probably going to need some sort of news or economic data that's going to suggest there needs to be further strengthening of the yen to do that. Otherwise, it's quite likely that we're just going to see the yen maybe consolidate around this region for a little bit before maybe it makes that push down to levels into the 130s. We have certainly seen gold continue to move up. We were talking the last time about the potential for it to move even higher based off of some of the trends we've been seeing in it. Today it looks like it put in some sort of major reversal candle. Generally speaking, gold is really overbought on a weekly chart and on a monthly chart. You can see with the RSIs up at 86 on the monthly, well extended beyond the Bollinger Band, and the same thing on the weekly chart. What this kind of indicates to me is that I think there's a good chance here that we're seeing some sort of short-term consolidation in gold. Last week it looked like maybe there was room for it to continue to run. This week it's looking like maybe we're getting a little bit too overextended on some of these movements. And so I think you have to kind of be mindful of that and potentially think about a pullback, potentially even a pullback to this 20-day moving average or so. Here's your 10-day exponential moving average. That's also an important region to maybe look for some support. So I would, again, kind of be wary of gold at this point just because it's had such a big move up. It is overbought on the weekly and monthly charts, and everybody is talking about it. And that kind of gets you thinking that it's probably due for something here in the form of a pullback or at least a sideways consolidation just to frustrate everyone. We've also seen oil kind of make a little bit of a rebound after falling through support at this $66 level. We've talked about that, the importance of that level many times. It looks like oil right now is consolidating, and if I were to make a guess based off of what it looks like, you could almost make an argument that it's formed a bear pennant, and that would suggest that we're not only going to see oil move lower, it may actually move below 57 3/4 and potentially move to even lower levels. I would think maybe the next major level of support for oil doesn't come until around $52, and that's probably the next major level if this is a bear pennant that has formed. Likewise, resistance probably up here at 66.5. I imagine that now that that level has been breached, it's going to be a pretty strong level of resistance going forward. We've seen the DAX snap back a little bit. It's now been above the 10-day exponential moving average for about 4 days. So if there is some sort of reversal of trend taking place, you really need to see the DAX start moving up. You really need to see the DAX take out the high that we saw just the other day here at 21,500 or so. If that can happen, then you can make a case for the DAX to really move up and perhaps forming a little bit more of a bullish formation, maybe even looking to fill a gap here at 21,700. The problem, though, is that we have to, again, continue to actually start moving higher. When you look at it on a little bit of a closer basis here, again, it really doesn't have the looks of something that's going to continue to move up. It almost has the look of something that's sort of reversing a little bit. So my thought process would be that if you don't see the DAX really begin to move up starting with Wednesday's trading session, and if you were to see it break below this 10-day exponential moving average, I would think you'd start seeing the DAX really start moving down again. So until you take out this high at 21,000, call it 21,450, I think you have to favor the downside. If once you take this out, you can start thinking about higher levels. The FTSE looks a little bit more constructive, actually, and you can see that the 10-day exponential moving average has decidedly turned higher, and you've actually seen the FTSE continue to make new highs. And really, it looks like the FTSE could potentially head all the way up to about 84.20. It doesn't really look like there's very much resistance or anything really to stop it along the way. So it almost looks like that's probably the next spot. Likewise, I think probably the 10-day exponential moving average now serves as support, and that probably comes somewhere around 82.20. When we look at the Nasdaq, interestingly, the Nasdaq, and again, this kind of goes to and shows the importance of this 10-day exponential moving average. You can see the Nasdaq's been below the 10-day exponential moving average, but notice what happened today. It reached up to the 10-day exponential moving average, and that was resistance. So you haven't seen U.S. markets recover and get above that 10-day exponential moving average like the FTSE has and like even the DAX has. So it looks to me like until that happens, you really have to treat the markets in the U.S. as something that's still trending lower until this really changes. And so right now, when you kind of look at the Nasdaq a little bit more closely, you can certainly make a case and say, well, hey, we have this giant gap up here at 18,830, and that's certainly potentially an area that could be targeted if you can continue to move higher. The question is if you're going to actually be able to do that. There's clearly a very big and formidable downtrend in place, and it certainly looks like we had this really nice bear flag. So right now, I think as long as you're below that 10-day exponential moving average, you have to think about that as a major level of resistance. If that level can be broken, maybe you move up to 18,850. Otherwise, I think you're looking for maybe to undercut this low here at 17,600. When you look at the S&P, same exact setup. You basically hit the 10-day exponential moving average, and that's where you fell below. Notice we tried to get above the 10-day here for 2 days. We failed. We couldn't get above it. We came back down below it. Now we're hitting it again. So again, here's your resistance level at 53.07. If you break out above that, you can start talking about moving back up to 53.90. But until that happens, you have to continue to think about downside risks and maybe undercutting this low at 51.10. And finally, when you look at the Dow, we're not even close to the 10-day exponential moving average. So that clearly is going to continue to be a resistance zone if we should get there. Likewise, I think you still have downside risks here because, again, what this is kind of implying to us is that we haven't seen any sort of major change in trends yet here in the U.S. So, right now it looks like the U.S. markets are still have a lot to prove. They had a good performance today, but unfortunately, one day doesn't really make a trend. And so I think right now you're still in a situation where we're still at a point where I think you can continue to see dollar weakness and U.S. equity weakness, and you can probably see euro, pound, yen strength, and maybe even DAX and FTSE strength. But even on the DAX, that's still yet to be proven. Anyway, have a great rest of your week, and we'll see you again soon. Bye.